This is Steve Wise, and today we're going to be talking about binary options. We just want to do a brief introduction to binary options, what they are, and kind of how they work and how you can use them to help you trade better in the market. This information is being distributed on YouTube, so bear that in mind and follow the rules regarding distributing content from YouTube. Otherwise, it's copyright 2010, binaryoptionbroker.com. Okay, so let's get started and start talking about what are the characteristics of binary options. Binary options have a lot of the characteristics you find typical of standard options, or more appropriately European options. They typically have a strike price, they have a spot price, they have an expiration price, they have some sort of payout within, whether they're in the money or what the situation is going to be on out of the money. You can find a glossary of terms at binaryoptionbroker.com and just click on glossary of terms, and you'll see typical terms that are associated with options trading in general. But specifically with regard to binary options, what makes them different from standard options is they expire much more quickly. First of all, typical contracts are set to expire at the top of the hour, or at the end of the day, or at the end of the week, depending on what your broker offers in terms of binary options contracts. Another oddity or another difference is that there's no put or call premium on a binary option. Typically, a binary option is purchased on a fixed dollar amount, and the contracts are set at the spot price, so there's no put or call premium, and there's no spread between put and call price. You buy a fixed dollar amount on the binary option that you're interested in, and that option has a fixed payout. It has no spread. You're not buying a call premium. There's no premium hurdle to overcome. You're buying at whatever the spot price is of the underlying security in most cases. In some cases there is some sort of algorithm with regard to that, but usually it's going to be at or near the spot price for the stock or security or index or whatever that you happen to be interested in. Contracts are available only on the most liquid securities because of the high rate of return on these investments. They have to be priced in a certain way, and a lot of that has to do with the Black-Scholes model of options pricing. And that requires, one of the fundamental requirements of Black-Scholes is that it be an efficient market, and the only way you can have an efficient market is if it's being traded on a very highly liquid security. The next thing is contracts are only executed at expiration, so that means you basically buy the contract and hold it to the end. You don't have to worry about trading it or getting a different price for it or trying to sell it back in the market. You buy it, you hold it, and it expires either in the money or out of the money. So it's a kind of like a fire and forget security. Another thing is that, as we said, binary contracts are fixed yield, and typically in the money binary options typically pay 60 to 80% yield on investment at expiration if they're in the money. Sometimes they pay out of the money. For example, if you invested $200 in a binary option that had a 15% payout, when the option expires out of the money, you would receive $30 back out of your $200 investment. No, that's not what you were hoping for, but it does make for some interesting scenarios when you're talking about hedging and creating other sort of positions, and hopefully we'll have enough time in this video to get to some of those, what those positions look like. But if not, I've created a couple of other videos that I'll post links to that you'll be able to see on here, that you'll be able to click on and see some scenarios that we've dreamed up for you. Let's see, what else we want to talk about. Binaries trade on the large stocks and indexes. Typical stocks you might see are Google, Yahoo, Microsoft, IBM. Foreign stocks you might see are Volkswagen, BMW, perhaps Bayer, if you're familiar with German stocks. Otherwise, you'll see high-profile forex rates, dollar euro, dollar yen is typical, yen pound, pound euro. Those are all going to be typically found on the binary option exchange. You'll also see high-profile commodities on certain exchanges. You'll be able to trade binary options on oil, gold, silver. I've seen copper. You'll also see some foreign indexes as well. I seem to recall seeing the Hang Seng, as well as the CAC 40 and the Australian or All Ordinaries 100. So you may have to look around. Not all brokers carry all securities, so you may have to hunt around a bit to find a broker with the securities you're looking for. But shop around, you'll find what you're looking for. If you're an expert on gold, then you'll need to go to one broker. If you're an expert on Microsoft, then you'll probably need to find another broker, because brokers tend to specialize in one area or another and pretty much don't seem to be dabbling in functions where they're not expert, where they don't have expertise in. It requires a certain amount of liquidity to be able to handle these trades, and not everybody can be an expert in everything. Another thing worth mentioning is that binary options trade as a long call or a short, which would be a put. You basically you go long a call to go long the market on a binary option, and you go long a put to go short the market or short a binary option. There is no there's no margin account, there's no leveraging, there's just, you just go and go long a call or long a put, and that either puts you long or short the market. The other thing to note is that binaries may or may not trade without commission or spread, depending on your individual broker. So again, shop around, get the best deal, and make sure that you're trading in obviously the markets that you're best at. I only have a couple of seconds to talk about what the payout looks like on a binary option, but I'm just going to throw up a binary call and a quick binary put option at the same strike price on the same security and the same dollar amount of investment, just so that you can see what they look like. A typical 75% yield call binary option priced at $577.50 a share will pay out $350, $150 profit plus $200 initial capital back on an expiration greater than the strike price of $577.50, and will otherwise pay out $30 back on an expiration less than $577.50. Likewise, looking at a put option, the reverse is true. If the strike price is below $577.50, then you'll receive a payout. In this case, we used about looks like $89 and $7 return if it expires above $577.50. Just so that you can see, the second payout is based on a $50 call option as opposed to a $200 call option. But you can see how the charts are different, and you can find out more information at the video links I'll post throughout this video. So take a look, and I hope you found this helpful. Otherwise, this has been Steve Wise, binaryoptionbroker.com, copyright 2010, all rights reserved. You can find out more information at binaryoptionbroker.com, or more information in general about options trading at make300aday.com. Thanks, and I hope all your investments expire in the money.